Markets might look calm, but signals are shouting louder than ever. Welcome to Daily Market Waves by Investing Angles, where every candle speaks and every Elliott wave whispers before the crowd even blinks. Today's strategy breakdown dives deep. Volatility closed dangerously, just as we warned. Yields never better. The momentum is real. TLT, it's unfolding exactly as expected. Dollar, still just warming up for a liftoff. Yen, flying the other way and fast. S&P 500, a multi-annual breakdown with sector and large cap scans. Nasdaq, Elliott wave says it all. And the feature of the day, Buffett's Berkshire. Is it prepped for a nosedive? And big thanks to our 26,000 plus subscribers and a warm welcome to all new traders joining daily. And stay tuned, the second part of today's coverage drops later. Daily Commodities, featuring gold, oil, gas, uranium, and more. A big update is coming for gold, don't miss it. And today we start with volatility, as usual. So what we are seeing here is quite disturbing. So yesterday, after a failure to make a new lower low, today we have consequences of it. So the piercing line, a very strong bullish candle. Now, if it is confirmed tomorrow, we will know what to expect. And a strong bullish harami for the candle here, for the big one. Also, I'd like to mention that earlier today, about 5 or 6 hours ago, we posted a very interesting update, market alert for our subscribers, for our ultimate members. I hope they had a chance to watch and read it, and they identified the levels that are required for a reversal. So I hope they are listening. And now let's have a look at the weekly closure. This is becoming very interesting. So now we have on the VIX futures, we have a move down and we have a pull up. So technically, if the candle closes on Friday above this blue line here, well, it will be bullish, but it might be even strong bullish because of the reversal in the middle of the week. So far, the volatility index itself looks bearish, and if it closes below the red line, it will be a continuation. However, there are 2 more days to watch, and I would say the critical one will be tomorrow, because we would be looking for a confirmation, a potential confirmation of reversal. Now let's have a look at the bond market. So what we are seeing here, I think this is getting very serious. On the 2-day frame, we are looking for 3 white soldiers, and this is very, very serious bullish statement. After a strong bullish reversal on the daily, now we have 2-day joining, and obviously the weekly, it looks like it's going to be very bullish. Now, if we look at the bigger picture, 2, 5, 10, 20, and 30 years yield, so the same situation here. If we switch to the 2-day frame, we are seeing that 20-year and inverse counterpart for TLT is also forming 3 white soldiers, which is a strong bullish motion. Well, that's the perspective, and I think that the bond market is giving us an early warning. Now let's have a look at the 20-year yield chart. Chart practically remains the same. Nothing changes since we charted on April 25th. Minor updates here and there. We're just adding more elements. So far, the wave looked impulsive. Maybe we would need to adjust the slope a little bit, but let's see what the next 2 days will bring us. So far, the target is about 5.7, 6.0. Now let's have a look at this one. We are not looking at it very frequently, but today might be a point. So now we are looking for, this is an annual chart, by the way, annual chart, 12 months. Each candle is 12 months. So on January 10th, 2025, the candle crossed the 100-year moving average. Now, then it was pulled back, and now it looks like it is trying to make another cross. This would be the third one in the last 3 years. Well, that's a very interesting position here, and we might see a stronger flight upward, and especially if we take into consideration this 8x20 EMA bullish cross that happened the first thing in year 2025, and the last time this cross happened in year 1955, and you know what it looked after. So this was our statement in the annual report. Long-term technical indicators and candlestick patterns continue to support a sustained bullish trajectory, pointing to rate hikes potentially extending into 2025 and beyond. It remains to be seen how and when the Fed adjusts its narrative to align with these unfolding dynamics. This is our statement, and it stays as it is. Now let's move on to TLT. So as we said, TLT is looking very bearish, and now it just confirms it day after the day. We have 5-day closure, strong bearish, 10-day closure, strong bearish, and the daily is just falling down without any stop right here. Now, if we look at the bigger frames, for example, like 15-day candle, so we are seeing that it also closed with a bearish continuation potentially, and now looking down. For the monthly candle, well, it says for itself, it speaks for itself. Now we are looking for lower lows. Speaking about Elliott waves, this is the chart that we shared back in April. This is the latest update to our chart, saying that there was a top here so far. So far TLT is falling down, and by the way, if we measure it from the most recent top, it already lost 6%. So far this wave is aligned, potentially wave 3. If you're interested in bigger picture, you can check on our website investingangles.com for an ultimate package which gives you access to TLT, bond market, and all strategy package writings. Now, and also the longer term perspective, bigger charts like annual charts or quarterly charts. Well, let's move on. But before we move on, if you found value in how we track the turns before the crowd catches on, this is the time to subscribe. We are building a community of traders who rely on deep technical signals and not on headlines. If you're one of the returning viewers, thank you. You already know the value of staying ahead. Let's make that official. Hit that subscribe button. And by the way, if this breakdown has helped you clarify the direction or risks, just let us know by tapping the like button. It's a small signal, but it helps more than you think. Now back to the charts. This is the dollar chart today, and even it started strong bearish. It was at the beginning of the day, it was strong red, and I thought, wow, maybe it's time for reversal. However, not. It pulled back and technically canceled this Harami candle that was formed yesterday, and now we are looking for a continued move higher, and the 3 white soldiers on the weekly frame, most likely we will see a continuation here. And in 2 days we would be looking for an extension of the bullish momentum here, 8-day frame. If it closes like this, it will be certainly a very strong uplift for dollar on the midterm frames. And now if we look at the chart practically remains the same as we charted it just last week on May 9th. No questions so far. The changes, I made a few minor updates, but the targets remain the same. So far, we are looking for a continued rally for the dollar. Now let's have a quick look at the yen. So far, this is US to yen ratio chart. So far, 2 days, we have 2 days a little pullback, but the candles were not able to convert into a bearish reversal. Now these two are viewed as a bullish continuation ones. And speaking about larger frames, yesterday yen closed this fifth 5-day frame with a huge bullish candle, and now we are looking for a continuation. Although we might see a consolidation for a few periods before moving higher. And today in 1 minute 19 seconds, this candle is closing, and technically this is a confirmation of reversal on the 8-day frame, which is quite big. This is stronger than the weekly. And also today, 3-day frame, we have a freshly made MACD bullish cross. So somewhat similar to happened here in year 2024, in October 2024, after which dollar rallied about 13%. So if it rallies the same amount approximately, then we will be looking for a ratio of 159, 160. And although it might not be an immediate move, we might see a consolidation around this 200 periods moving average before the main move starts. Well, that's been discussion about strategy. Now let's talk about stock market. And we start with our major indices: S&P 500, Nasdaq, Dow Jones, and Russell. So Dow Jones is the most critical and concerning one. First of all, I'd like to say that this candle today technically confirmed a reversal on the daily frame. If we look at the 2-day frame, it's even stronger. If it closes tomorrow like this, it will be a reversal on the 2-day frame. So far, very big concern. And I think that this impacted S&P 500 because at the beginning as well it was trying to form a green candle, but in the end it even failed to make a new higher high and formed a very nice Harami cross, bearish Harami cross here, so which is technically bearish, but it still needs a confirmation. If we see a confirmation tomorrow, well, then it's gonna be something serious. Russell is not looking good. However, it's not confirmed yet. Let's see what the next day brings. Yeah, the only index that is looking so far bullish, it's Nasdaq. Let's see how the battle ends tomorrow. But now we have a big disconnect. Dow Jones is bearish, S&P 500 neutral with a bearish hint, and Nasdaq is bullish, and Russell needs confirmation for either path. Now let's talk about technicals. Technicals remain the same. We are watching these huge MACD bearish crosses on the monthly frame. So far, they are not reversed, and bulls need to work really hard in order to reverse them by the end of May. Now let's talk about the Elliott waves. So this is practically the same, nothing changed in the chart, and I'm still looking for potentially 3 counts here. One is impulsive, the green one, 1, 2, 3, 4, 5. The big concerns are, first of all, the structure of wave 1, which is not impulsive, and it's neither a diagonal or leading diagonal. So wave 3, potentially right now, it's not impulsive either. Too many disconnects, too many overlaps. This one, another one here. So it's next to impossible to bring it to dissect it into 1, 2, 3, 4, 5 structure. So it needs to push higher in order to resolve it. But let's see, there are still gaps. Another options are this is wave A of a bigger correction ABC for wave B, or immediately wave B with a move down for wave C. This is the chart that we shared on April 22nd, and these targets remain intact. So technically it's surpassed. The target's been surpassed. Let's see what happens next. And this is also a minor chart that we discussed back in April 22nd. And by the way, those who listened to these calls and went long on April 22nd would make 11.6% up till now. And this is and also we are tracking this in our live trade room, where master trader David does the calls. Well, if you're a member, well, you must be happy at this moment. Well, that's the perspective, and this is the breakdown for wave C, which I think it's most likely an ending diagonal. However, there is not enough confirmation for either, because so many gaps here, and it's difficult to forecast the waves in such conditions. Well, that's the perspective. Let's see how it moves tomorrow. Now let's have a look at the sectors. This is the biggest concern, I would say. So if we look at financial, which closed with bearish engulfing, industrial, bearish engulfing, staples moving down after yesterday's strong move, utilities potentially could reverse, but this hammer requires a confirmation for either pass. Healthcare is bearish. Consumer discretionary, they failed to close the new high, and most likely this is spinning top. However, it's neutral. And this one, energy, is bearish because of the Harami cross. So the only one which is bullish is XLK or technology. And this is becoming very interesting, whether technology would be able to lift the entire market, because everything looks bearish or bearish neutral. Now let's have a look at the candles for large caps. This is also interesting. So Microsoft is bullish. At this point, it has formed a bullish candle. The only concern is that Microsoft is a bit overbought. RSI. So this is higher, by the way, than it was in July 2024. Let's see what would be the reaction for this condition. However, I would be very, very cautious about it. Amazon is clear. We have a spinning top and a bearish engulfing. Prepare for a move lower. Meta needs a confirmation. So far, this candle is not bullish, and it's neither bearish, strong bearish either. NVDA, well, now it put itself between the rock and this hard place. It's traded perfectly above Bollinger Bands, and the last time what happened after this case in January 6, 2025, I think that NVIDIA lost about 7 or 8% in one day. Well, let's see what happens tomorrow. And by the way, NVIDIA is grossly overbought. Well, and so the conditions are even stronger for reversal than it was in January. Well, let's see what happens tomorrow. I'm just giving you a warning here. So Apple formed a Harami cross, bearish Harami cross. If confirmed tomorrow downward, it would be a reversal. Google. This is an interesting flag here being developed, bullish flag. So far, this is wave A, B, C, potentially wave C. So if it reverses here with a strong candle, moves down, well, there's not enough space on this chart to place a target. Let's see how it develops, and I'll update it probably over the weekend. And the final one I wanted to say is Berkshire. But for Berkshire, I have a bigger picture and a few charts. This is a feature of the day. Let's talk about it in just a few moments. And now we will talk about Nasdaq. Just let's see what it develops with Elliott waves. So this is the chart that we shared with our subscribers on April 22nd. Those who follow this chart would have made 16%, over 16% from this point to this point. Well, and this is unleveraged. Now I'm looking for potential ending diagonal here. So this wave is not looking good and it's not impulsive at this moment. Let's see what happens tomorrow. So far, Nasdaq is bullish, but I'm really concerned about Dow Jones and the S&P 500, which may have a confirmation tomorrow, and also the sectors, the majority of the sectors. Now let's talk about the Buffett's company. And this is the chart that we shared on May 5th. We said that Berkshire Hathaway formed an ending diagonal, and today is May 14th. So now what I can see is that wave 2 has been extended up until here, maybe here. Well, that I think it's possibly here. So now would be wave 3 down there, wave 4 and 5. This is potential the worst case scenario for an impulse. Let me update just the targets. I think that wave 3 should be somewhere here, and this would be the most typical target area for wave 3 of that degree. So this is perspective, maybe something like this. So, and let me put some targets here. 470, 445. Let's make it round. Oh no, that's too much. 470. So this is potential targets for this current move for Berkshire. All right, so now let's wrap it up. A quick reminder, we offer a full written analytics package through our ultimate subscription. Every setup, every wave chart, every big picture signal we track. Interested? Just email us help@investingangles.com, tell us your country, and we'll try to tailor a special discount for you. So, when technicals and fundamentals drift apart, always bet on the candles. Volatility flashed red. Yields are charging. TLT is doing what we said it would. The dollar, prepping for takeoff. The yen, it's already losing altitude. S&P 500 and Nasdaq, they are climbing, but the charts say caution. Buffett's Berkshire could be the biggest surprise in the coming days, but not for us. The daily commodities edition drops in a few hours. It includes a critical gold update you'll want to catch before the turn. Subscribe, share with your trading crew, and drop your tickets in the comments, because at Investing Angles, we don't follow trends. We forecast them before the crowd even blinks. See you in the next one.